Hey, everybody, welcome to this week's episode of The Wire. I'm here with Nicole.
Hello.
And our special guest today, title industry expert and world-class title co-owner, Kelley Shumaker.
Hello.
Welcome.
Thank you.
You're our industry expert today.
So much pressure.
Hopefully that doesn't scare you off too soon. But if you do just randomly click off and leave, it wouldn't be the first time it's happened to Nicole and I. So we'll just keep on moving.
Understood.
So Nicole, do you want to talk a little bit about what we brought Kelley in to discuss today?
Sure. So we typically talk about wire fraud and how it's affecting clients when it comes to realtors' emails being hacked and how they're redirecting wiring instructions for the buyer's down payment and closing costs or for a seller's proceeds. But today we want to talk about a different area, which is payoff fraud. And so when companies are ordering payoffs, these wiring instructions are being intercepted because a payoff is usually a good chunk of money and it's very profitable for these hackers. So this is the area we really want to dig into today.
Yeah. So let's take a step back. And for those that have just are listening to us for the first time, we focus primarily on different types of fraud that are happening specifically in the real estate space. That's what the majority of what we discuss is about. And so at a high level, what we're talking about today is what are called payoffs and payoff fraud. And so if you are someone who's selling a home or you have a client who's selling a home, one of the first things that a title company has to figure out is, well, who actually has the mortgage on that home and how much is it? So it's important that if you're going to sell a house, then it's important that whoever you have a loan with gets paid so they go away and we prevent any kind of future claims to that home. So that's kind of what the payoff process is for. It's to clean up any existing or prior liens that are on the property. And that's one of the core services that a title company does, is to make sure that that's done safely and effectively. Would you say that what would you add to that, Kelley?
No, I think you gave a good overview of it. Usually we would wait in the past for a title search to come back to show us what liens were on there. And we would reach out to the client for that payoff information. We are trying to get that information at the very beginning of the process. So the sooner we have it directly from the client, the less chance of emails getting intercepted or false information coming our way in ordering those payoffs.
Yeah. So generally speaking, the fraud that's happening more and more in this payoff area is, the fraudsters behind all of this, they obviously see that, siphoning off monies from payoffs can be quite lucrative because oftentimes those payoffs are for a lot of money, tens and hundreds of thousands of dollars. Generally, what they're trying to do is figure out how to insert themselves into the transaction, whether it's through a insecure email of a real estate agent or a seller, or even in some cases, a title company. Attorney offices is one that is happening more and more. So, they're finding vulnerabilities in different levels of the transaction. And so whenever and however they can get in, just like what they're doing with other forms of real estate wire fraud, they're replacing real information with fake information. And that's generally what's happening.
There's about two ways that they're really doing this too. They're using spoofed portals and then they're faking identities. And with how the internet's really making everything so easy for everyone to do business these days. And it's convenient, but it's also made it incredibly easy for these hackers to insert themselves into these transactions and make sure they are redirecting this information.
Yeah, Nicole, I think you made a good point with the spoofed portals. Back in the day, the only way we could obtain payoff information for lenders was a big binder, 3-ring binder called the K directory. And they would literally mail us out pages of replacements every month for phone numbers for lenders. Now you can Google a lender and go on their website and get their payoff information that way. We try and still stay with calling in manually because we know that we have the numbers in our heads. I have several lender payoffs memorized by now, unfortunately, but we still do the old school. We call in, we get that payoff information, and 90% of the time we're still getting payoffs either faxed to us or emailed. I tend to prefer the method of fax because you don't have somebody standing literally at a lender's desk and taking that payoff and altering it and faxing it to you. Emails concern me, especially if it's an electronic faxed email, because we don't know what their fax system is like. But for the most part, we are still getting a lot of payoffs faxed to us.
What part of this process scares you the most? Like what do you see as the biggest vulnerability? What scares you the most? What are where is the aspect of this that's the most distressing?
I think recently there are some lenders that are coming up with, instead of having their same routing number and account number that we wire to all day, every day for the last 18 years that we've been in business, they have account specific account numbers that we're wiring to. And that does concern me. That's why we want to get sellers payoff loan numbers right away so that we know the actual loan number that we're looking for. If that gets intercepted and we have a false loan number, then it's very easy for wires to go to an incorrect account. So I think that's where my biggest concern is, that all wire instructions lately have from certain lenders are different every single time. And you don't have that consistency, and you don't have that alert that, oh, this is different than where I wired to before, because it's always going to be different.
So are they doing that then? Like, why are they doing it that way? Are they doing it that way because they think it's more secure on their end? Or is it like, what's the reasoning behind that?
I think it's easier for them when the wire comes in to go directly to that direct account versus going into a wire room and somebody filtering in and looking through the memos to see what loan number to apply it to.
So it's an internal efficiency thing for the bank.
Correct.
Even though it potentially creates more vulnerability around the transaction.
Exactly.
Interesting. So, this is something that we're hearing and seeing more and more about. What does an ideal solution for something like this look like for you?
Honestly, I would love to have it in the form, we're a big user of SafeWire, and we're collecting sellers' information through SafeWire. And ideally, I'd like to have that information collected at the very beginning and the payoffs generated through SafeWire, ideally. And that way you've got your two-step verification, you've had that verification by your seller, and it's all in one place. But the sooner we can get that done in the process, closer to the beginning of it, the more comfort level I would have.
Well, you heard it, Nicole. Go build that.
Okay.
Build that. Yes.
I'll build that.
Get on it.
You don't want me building it. I got a guy.
I got a guy. I had an idea one time, a long time ago, to create a website was called I Got a Guy, because we would always call me and be like, hey, do you know somebody that can do this? I'm like, yeah, I got a guy.
So funny.
But it's probably fairly sexist to have a website called I Got a Guy.
I'm going to refrain from commenting on that one. And I think it goes back to, at the beginning of the process, once a lot of companies, and we used to in the past as well, wait until you got that title search back to find out what liens were on there and request the payoff information from the client. By that point, you've had so many emails going back and forth between buyer, seller, lender, agent, that it's opened up our vulnerability to what information we receive for the payoffs. So that's my biggest concern.
Well, yeah. And the reality is all of this information is public record.
Exactly.
So, anybody that knows, and if people are sophisticated enough to be honing in on these types of frauds and building, fake websites and modifying, payoffs and all that, they know that this information generally is public record, right? And so if you are able to figure out that this is public record, then it becomes, it's one thing to try. If I have a mortgage with Chase, or if I have a mortgage, Chase is probably a bad example because their information is fairly well known. But if I have a mortgage with a smaller regional bank that we don't handle a lot of payoffs with, but we know that that's who my loan is through, and a fake payoff comes through on that bank's, with that bank's information on it, it becomes harder and harder to spot.
I'm going to be very upfront about this. The smaller lenders are the ones that are terrifying. They'll send over their payoff. We call and we ask for wire instructions. We ask them to be sent securely, and we're getting them in a Word doc, unsecure. And there have been lenders that I personally called as the owner and said, this isn't acceptable and this is why. And the lack of them caring has just been huge. They don't care. They're still going to go and send Word documents of wire instructions via unsecured email.
So that's interesting because, I was just thinking about how you were talking about how wiring instructions are changing and how they change with each payoff. And you would think banks would care more, especially the smaller ones. I don't know what percentage of them have varying wiring instructions, but you would think that they would try and streamline their process to make it as seamless as possible with all of this happening, rather than make it more complicated.
Here's the reason why, right? This is a leadership issue at these companies, and it all begins at the top with their leadership. And the reality is, most of the people in the leadership at these places don't understand this problem, and they don't understand the way it's happening, how it's happening, why it's happening, any of it. And so they put, they don't know enough to put policies from the top down that say it's unacceptable to be sending unsecured wire instructions as an organization. And so these are leadership issues that you can't blame the person who's just following their procedures that that company has put into place. If their bosses and owners of their business don't understand what's happening, that's why and how this happens.
Yeah. And a lot of times, until they actually get faced with a case of wire fraud, they don't even pay attention to it. They think of it as it's not going to happen to them.
It's not going to happen to them, or it's somebody else's fault, right? Mm-hmm. It's not their fault. They weren't the ones that were vulnerable. And, that's the kind of shit that we see all day, every day. Like, no, it's, I didn't do it. No, my client got compromised. It wasn't my agent's email that got compromised. No, it likely was your agent's email that got compromised. And you all may not have figured it out yet, but the liability and vulnerability in the transaction is on you.
Right.
So sounds like another fun fight to have, Nicole.
I don't know about that. Yeah, you would think as a whole, the industry would kind of come together and tighten things up. But because of that, because banks don't really care, and they don't have to verify the recipients of wires either to make sure it matches who it's going to. There's just no changes that are going to be made.
It's not that they don't care. It's that they're ignorant, right? There's a difference between not caring, which is malicious, and being ignorant, which is negligent.
Sure.
Right. So there's a difference between maliciousness and negligence. And it's not that they don't care. That would be malicious. It's that they're ignorant, which leads to negligence. And at this point in the game, ignorance is not an excuse anymore. Like we can't be ignorant to this, and we have to understand how and why it's happening, and all of our responsibilities to fix it. And so I don't think it's that they don't care. I think it's that they don't know any better. And I think oftentimes, especially the smaller regional lien holders, whether they're banks or investors or whatever, they have a responsibility to the shareholders of their businesses that are lending this money and that they have to give a return on, that they better care. Otherwise, those shareholders could come back and say they're negligent if they lose their money. And I think that that's going to be a thing more and more, is that as E&O carriers are stepping in and saying, no, this has happened as a result of negligence, then, who's going to get left holding the bag? And once these lenders start holding the bag more and more because of their negligence, that's when I think this stuff is going to start to shift.
And I agree with, and Chris, you made a good point earlier about it begins at the top down. The employees, it's not that they don't care, they just don't know any different because it hasn't been taught to them the proper way to do things. And one of the things that's so key as in a title company is the owner has to be aware of wire fraud and how it can be perpetrated. And then they have to put in place proper training channels for their team. And I take complete responsibility if my team doesn't have protocols in place for handling these things. But, we meet weekly, we've had, monthly meetings, et cetera, just to go over what our process is for verifying payoffs and how we're obtaining that information and what's acceptable and what's not. And if there's any deviation, they know they have to come to me for any kind of override approval.
You're completely ahead of the game. Like, you are definitely a leader in this area.
Thank you.
So what does that look like? Somebody that's listening to this, maybe they're a title company owner, and maybe they're looking to improve their policies and procedures around payoffs. What does that mean to you, Kelley? What does that look like?
Well, I think if there's somebody listening to this who is working under someone else, they should be comfortable to have that conversation with their owner, because a lot of, especially if you're having older title companies or law firm owned title companies. For example, I had a conversation with an owner of a company not too long ago because they sent socials to us unsecured. And I had to call and talk to him directly. And he was completely unaware of some of the procedures in his office. So if employees are being questioned as to how they're doing things, they need to be taking that to the next level and not be afraid to approach their owner or their direct manager, because it's the only way we're going to get this resolved is by having people communicate properly and sharing information within our industry.
Yeah, that's our biggest vulnerability, is how we share information in unsecured ways. And, having different segments of the real estate space that all have their own information. So mortgage companies have their information, title companies have their information, real estate agents and brokerages have their information. And how we share all of that siloed data is oftentimes unsecured, which is where and how we're vulnerable. And until we get our arms around that collectively as an industry, someone is going to, right? And so I'd rather have it be us than someone else, because if we can't keep the funds safe of consumers, then what are we doing at the end of the day?
Exactly. And sharing information in our industries it's so important. We have a sales team that they're out at realtor meetings. They're having conversations with offices of agents and lenders, and they're able to communicate this to them. We've had emails come over where I've seen my sales team respond back and say, I'm sorry, but the wire instructions should never be sent unsecured. I'd be happy to come in and talk to you more about this. So it's being open to listening and having these people have the communication within our industry, because even though we're large, we're still a small, tightly knit group, I think. I like to believe that.
Cool. Well, what else is left that we did not discuss?
Oh man, wire fraud's not going away anytime soon. I'll tell you that.
It sure is not.
Like,
No.
what are they going to do next? What are they going to add in next?
Well, they don't have to do anything next, because what they're doing already is working. So it's like,
Yeah, exactly.
So Chris, I do have a question for you, for other people that are listening. So we talked about how we're receiving payoffs via faxes, via e-fax, via email. What is your recommendation to other title companies as the best way to be receiving these? Is the e-fax secure if you have your two-step verification in on your email?
Well, I mean, I think it's a little bit of I don't know that it's a black and white answer, because you have variables, which are who's sending you the information, right? So like, you can ask and request things be done a certain way, but if the other person in the other party to that is going to send it the way they're going to send it, right? So if you say to let's say it's a smaller regional lender that you're getting a payoff from that you haven't worked with before, and you're telling them, we need you to fax this to this, and they tell you, well, we only do it through email, then what do you do? Right. So I think that's why some of this becomes complicated, because, it's hard to have one rule that prevents this, because The other reason is if you have that one rule, then it's likely they're going to figure it out, and that rule is going to have to change. So, I mean, I think that dealing with when you're dealing with payoffs, if they're unknown and if they're new, having a policy and procedure in place that gets articulated to the staff that's handling payoffs, because oftentimes the people handling payoffs in these companies are usually junior staff that are, newer hires, and it's kind of like the entry level type positions, right? So having step-by-step policies and procedures for new employees that are dealing with unknown payoff lien holders, then I think that's a good place to start. And then you can kind of dig into what does that mean? What does that look like? Okay, we're dealing with a mortgage holder that we haven't dealt with before. What are the policies and procedures we need them to adhere to? And so that means that we have to make sure we're dealing with a known person on the other end of that transfer. So we have to be able to identify them through a known phone number, a known email address, a known website, how do we know that we're dealing with the people that we think we're dealing with? So I think that's probably more of like begins to, again, it's not a black and white thing to say, do this. It's more of, okay, how do we create as much of a bulletproof process for somebody that's never done this before that just gets hired into our office, right?
Yeah. And I think that's where our processes are different than most companies. Some companies have either that entry-level position for ordering payoffs, or they have a person that handles a file from start to finish. And we don't do either of those. And the problem with the start to finish part is that if you're crazy busy trying to get figures out and commitments out, you're not paying attention to the smaller details of ordering a payoff. Whereas with what we do is we have it specialized by department, and our title department they're experts at clearing title. So ordering payoffs, even though it may seem below their level of expertise, they still are the ones that handle it because they know where to go for their payoffs, what to look for when they get them, and how to verify them against what's on title.
With everything going on right now, I think that's a really great approach. I think it's smart as a business owner to make sure that you're trusting the people that are handling that for you, because it is scary. Payoff fraud is huge right now. Huge.
Yeah. Save the entry level stuff for, your entry level people can do the entry level things like mail and overnights and, basic order entry. But anything that involves potential wire fraud should really be handled by people in the organization that have experience and that have been with the company for at least a short term.
Now that the next part answer of the question too is partnering with a forward-thinking technology company that may, on their roadmap in the short term, be working to solve this problem with technology that is empowering title companies to de-risk these payoffs. So that's, without giving too much away, that's the other side of this is there will be players in the space who are going to solve this.
And that's what we need. That's what our industry needs right now.
It's what the industry is really demanding too.
Automation and security.
Mm-hmm. Absolutely.
Well, thank you for joining us today, Kelley. It was great catching up with you. We certainly don't do it enough. And
no, don't.
And Nicole, was there any last bits and pieces we wanted to extrapolate out of Kelley?
I don't think so. I love the information that she shared. It was great. If you guys have any questions for any of us, or if you want to just reach out to me, I can redirect any of those questions. My email is nicole@safewire.com. Be happy to answer anything for you.
Thanks, Nicole.
Thanks so much for being here.
Kelley, thanks so much for joining us.
All right. Thank you.
All right. And thank you for listening to another episode of The Wire. Check us out wherever you get all of your podcasts. We're also on YouTube and on social media at SafeWire. Later.
Bye.
Bye-bye.